Our next speaker, the title is Making Sense Out of Today's Fertilizer Market, and the speaker is Vroomen, Dr. Harry Vroomen of the Fertilizer Institute. And this is, I think you've heard some mention of, obviously this morning, of input costs and things like that. This is a topic which is on a lot of people's minds. And the Fertilizer Institute, I'll tell you a little bit about them if you don't know who they are. They're the leading voice in the fertilizer industry, acting as an advocate for fair regulation and legislation, a consistent source for trusted information and data, network engagement and outlet to publicize industry initiatives in safety and environmental stewardship. So the Fertilizer Institute represents that industry, and in his capacity as Vice President of Economic Services, Dr. Vroomen is, he directs the Fertilizer Institute's statistical programs. He conducts market analysis on agriculture and fertilizer industry and develops their annual Outlook Conference. In addition, he manages Fertilizer Institute's budgeting and member dues, calculation, and forecasting. He joined the Fertilizer Institute in 1993, and previously he did high-level work in the USDA's Economic Research Service. Dr. Vroomen has a master's degree and a BS in Ag Economics from Penn State University and a PhD in Economics from the George Washington University. So, Dr. Vroomen, I will turn it over to you.
I'd like to thank Sandy for that kind introduction and the organizers of this conference for the honor to be here with you today. I also would like to thank all of you, because I know it's a lot to ask to have to listen to two economists before lunch. So I know how difficult that is. Right. Grab a clicker here. All right. Well, I know the reason I'm here today is not because of my bubbly personality, but because of what's going on in the fertilizer market. And Dr. Brown has already touched on some of these issues, which is great. And I think to quote Dr. Brown, I think he said fertilizer prices are out the wazoo. And as you can see here, that is the case. Nitrogen prices record high, phosphate and potash, near their records back in 2008. Some of you probably, remember back in 2008 when fertilizer prices went very high. I've been following the fertilizer market now for over 35 years, and I can say I've never seen more factors impacting the market than this time around. And I'm going to go through a lot of those here. Sort of just a little introduction to the presentation. I think it's important to point out some of the characteristics of the market first, so you have a little better background of why these things are happening. I'll kind of set the stage of where the U.S. fits in the market, the major factors which impact fertilizer prices, giving you sort of an example of one of the factors that really makes a big difference, which is playing a role again this time. The factors driving fertilizer prices since mid-2020, and then we'll kind of take a look back and see what's different this time between 2008 and 2009. And one thing I am prohibited from doing is making a specific forecast, what fertilizer prices will be in the spring and things like that, because we represent the industry. But to be honest with you, these commodity market prices change so quickly, I really, wouldn't know when they're going to change and go up or down anyway. I think some of you might be familiar with ammonia production, and again, it's important to note, again, as Dr. Brown touched on, things can change very quickly. Ammonia plants are big chemical complexes. They take about 3 to 5 years to build a new plant, billions of dollars in investment, and they're also typically run relatively close to 90% of operating rates. You can go somewhat higher, but that's typically where they're run. You can't run an ammonia plant at 50%. It doesn't work. It's a chemical process. So when demand does go up, there's not a whole lot of room for production to increase until you start building new plants, and that takes years. Phosphate, you're familiar with phosphate here because we have some in North Carolina. It's surface mining. You take these large drag mines and you remove the overburden from the layer of phosphate, and then you scoop that up and you further process it into fertilizer products. Very energy intensive, just like ammonia production. Potash is underground mining. And there's only 14 countries in the world that actually produce potash. And like phosphate, it's a resource, so similar to coal, if you don't have potash in the ground in your country, you can't produce it. So again, it's very limited production, again, energy intensive, and potash mining is underground mining. It's typically anywhere from 1 kilometer to 1 mile underground. So everything that has to be moved has to be taken up and down an elevator shaft. So you see this borer here, that piece of equipment that scrapes the potash off the side here. These pieces of equipment, cost roughly, in the range of $10 million. And if you want to increase production, you have to take this borer piece by piece up and down the elevator shaft, assemble it down in the mine. So again, if you want to crank up production, you don't just flip the switch. It takes a long time to do these things. And of course, these nutrients are mixed in different formulations to come up with the fertilizer products many of you are familiar with. So now I want to kind of look at where does the U.S. fit in the global market. The U.S. is a large producer here. You can see the third largest producer of ammonia, urea, and of processed phosphates, DAP, MAP, and triple superphosphate. We're a very small producer, less than 1% of global production. There's one plant in New Mexico that produces potash in the U.S. And when I'm talking about production here, I am talking about manufactured fertilizers. The organic fertilizers are produced more close to where I live in Washington, D.C., as some of you are familiar with. Just a quick disclaimer, I have a lot of respect for politicians, so this is just an attempt to keep everybody awake because I am an economist. So now switching to the demand side, these are the crops that drive global fertilizer production. Consumption, corn, wheat, and soybeans. Throw in fruits and vegetables and soybeans, you're up to about 2/3 of the global total demand. And again, as we're all aware in this room, the U.S. is a major ag producer and also a major agricultural exporter. So oftentimes people think the U.S. is the largest fertilizer consumer in the world, and if things don't change here, why are fertilizer prices changing? But you can see here that the U.S. only accounts for a little over 10% of global fertilizer consumption. So about 90% of global consumption is the rest of the world. So oftentimes when things change in the fertilizer market, it's because something's changed somewhere else, not necessarily just in the U.S. We're also a very large importer of fertilizer, one of the largest in the world. You see here we're the second largest importer of ammonia, third largest importer of urea. Despite the fact that we're a big phosphate producer, we're still the third largest importer of phosphates, and the second largest importer of potash. Most of that comes from Canada, unfortunately, which is the largest producing area globally. So now I want to touch on the market factors. And again, I'm not going to give an economics lesson here and put everyone to sleep. But as you all know, it's supply factors impact the price as well as demand factors. And there are many, many factors which are often forgotten. Oftentimes I get asked, why are fertilizer prices so high? And people want me to give them one reason. And there isn't one reason. There are just many, many reasons. And these reasons build on each other, which you'll see as I go through the presentation. One of the things, a really important factor in the fertilizer market, I wanted to point out, is trade. You see here for agriculture, trade is pretty huge. You look at 5 major crops there, about 22% of those crops that are produced get exported to a different country than where they're produced. That's a little over 1 out of 5 tons of production. That's quite a bit of trade. For fertilizer, that share is double. You see there that 44%, or close to half, of all the fertilizer produced in the world is exported to another country. And again, Dr. Brown touched on these issues, but when you export fertilizer, or fertilizer gets traded, there's a lot of transportation costs involved. So even if nothing's happened to fertilizer supply and demand, if shipping costs go up, whether it's truck, rail, barge, ocean freight, and Dr. Brown again showed how these rates are up significantly. This adds to the final price of the fertilizer. Energy costs, again, a major, major factor. One of the things I wanted to show is anhydrous ammonia. It's NH3. The nitrogen in anhydrous ammonia is actually free. It just comes from the atmosphere. The atmosphere is about 80% N2, and that's where the nitrogen comes from. It's basically free. It's the hydrogen and the energy source that's really the cost in this production. And of course, anhydrous ammonia can be used directly as it is in North America, not in the rest of the world, and then further processed into other downstream nitrogen materials. You can also see here that there's also many industrial uses for ammonia, and that's about 20% of total demand, so it's not just agriculture use. So how important is natural gas to ammonia production costs? Well, again, very important. If you look at variable costs here, when natural gas prices are down at about $2 to $3 an MMBTU, natural gas accounts for about 70% of the production cost. When natural gas prices get higher, about $8 to $10 an MMBTU, it's about 90% of the production cost. So natural gas costs are a very, very big factor in the cost of producing nitrogen. And just to give you an example of what happens here when natural gas prices go up, if you look back here at 1999 back to kind of 2008, you see U.S. natural gas prices rose significantly. And what happened then? Well, you see in the blue bars here, the number of ammonia plants in the U.S. declined significantly. The reason for that is as production costs got higher and higher in the U.S. because of natural gas, those producers could no longer compete with the Middle East producers, Russian producers, Chinese producers, Trinidad producers around the world where natural gas prices were significantly lower than in the U.S. And these plants, after shutting down for a while, were eventually just kind of went out of business. And you saw here a big drop in the number of plants. U.S. production capacity for ammonia fell by over 40%, as did ammonia production in the U.S. Big drop in production. But of course, demand was still strong. It's very significant in U.S. agriculture, as you all know. So to meet that demand, U.S. nitrogen imports basically doubled. We imported approximately 20 million tons of material. So again, when you have to go to the world market to import fertilizer, like any other commodity, you have to pay global prices to do that. And you see what happened here. I combined the blue bars, which is domestic ammonia production, or nitrogen production in terms of N, with nitrogen imports, the green bars. So you see we went here from importing about 25 to 30% of our nitrogen to nearly 60% of our nitrogen. So again, significant dependence on the market. And this was all caused because natural gas prices went up in the U.S. Now, fortunately, we had the shale revolution here, which brought on a lot of oil and natural gas production and has resulted in lower natural gas prices in the U.S. And you see there was expanded production by a number of plants here. Some of the old plants were reopened, and then we had some new plants built in the U.S. So we're back to the capacity we were before all these plants shut down. And you can see here, just extending that graph I put up earlier, you see that we're back to 36 plants here, and some of the newer plants are larger, so we're back to the capacity we were before. U.S. ammonia production has rebounded, and actually in 1920 there, that was the highest level of U.S. ammonia production in decades. And then nitrogen imports again have declined back to where they were, so we're less dependent than we were, but still import 6 million tons of nitrogen, which is again a significant amount. We're also back closer to where we were before all these plants shut down as far as import dependence, but still significant. So now we just want to kind of take a look at what actually is going on with fertilizer prices. And I think it's important to put into perspective sort of what did we know, when did we know it. So one of the things that's important is where did we start from? What was the fertilizer industry as far as producers, importers, everyone involved with the industry, retailers, what were they looking at? Well, if you look at, just a year and a half ago, through June 2020, you were looking at some of the lowest fertilizer prices in many years. So that was the starting point. Again, pointing out that it's a global market. And obviously, everyone's aware we had a global pandemic. So again, what was the industry looking at here? Well, here's a report that came out from the World Bank, and you can see they're sort of highlighted at the top. Their fertilizer price forecast, again, to drop for the first quarter of 2020, the 7th consecutive quarterly decline. So if you're in that industry, things look pretty bleak. A little further down there, in 2020, the index is projected to fall by another 10%. Again, pretty bleak. It doesn't send a signal to, hey, let's build some new plants, because things are looking pretty bad. And then on the bottom here, the upside risks include prolonged widespread supply disruptions, while the downside risks include a slower than expected recovery in demand. So again, not optimistic outlook. There's an International Fertilizer Industry Association. They have global correspondents who give them projections, and they put together a global outlook for fertilizer, demand outlook, roughly twice a year. It varies. And you can see here that before COVID, after a drop there in fertilizer year 18-19, they were projecting only about a 1% growth for the next 2 years in global fertilizer demand. Again, after falling prices for 2 years, a pessimistic outlook, not a big increase in demand. Then COVID hit, and what happened? Well, they revised their forecast a few months into COVID in July of 2020, and you can see here that after not a big demand outlook, all of a sudden they're talking about a big drop in global fertilizer demand. So again, if you're in the industry, things have been bad for 2 years, and the forecast is for even worse. So again, that's sort of the starting point there. Now, crop markets, again, are important, and as you can see here, corn, wheat, and soybeans alone account for 70% of agricultural fertilizer use in the U.S., and corn alone accounts for about half of that use. So let's kind of look at corn prices through December 2019. You see here that corn, wheat, and soybean prices are highly correlated. Obviously, that's for a reason. When one price goes higher, farmers switch to that crop and vice versa. But you see very high correlations. The reason I point this out is I'm going to combine these three lines into one just to make it easier so we don't have lines all over the graph. So the next chart here, in blue, you see the average of those three prices, wheat, corn, and soybeans. The green lines is the USDA fertilizer price index. So you see there's a pretty high correlation between these, and we often hear the criticism from growers that, well, every time the corn price goes up, fertilizer producers raise their price. And a lot of that is to do with the fact that that's because demand goes up. That's why the prices go higher. And I also want to point out that relationship doesn't hold all the time. You see there, corn prices exceeded fertilizer prices early on in that period. In 08-09, fertilizer prices exceeded these crop prices, again, because the supply-demand factors affecting fertilizer were somewhat different than the supply-demand factors affecting the crops. And again, here you see, because of drought and things like that, in the 12-13 period, the crop prices were significantly higher than the fertilizer prices. But again, they tend to follow each other because when demand increases for fertilizer, the price goes up. So, another thing is here, what were these producers looking at? Well, you look at crop markets, what was going on there? USDA monthly comes out with their forecast for the season average price for many of the major crops. I'm just going to focus on corn here, again, because it's so important to the fertilizer market. But you can see here, after some pretty, relatively low corn prices for a few years here, by August 2020, USDA was forecasting a season average corn price of $3.10. That was the lowest season average corn price in 14 years. Very low forecast. So again, the outlook for as recently as 18 months ago was again very poor. What happened? Well, a lot happened. Weather impacts around the world, less acreage planted in the U.S. than was originally anticipated, lower yields than anticipated, and within only 6 months, USDA went from projecting the lowest season average corn price in 14 years to projecting the highest season average corn price in 7 years. So the point is things turned around quickly. And you can see here, these are season average crop prices, again, from USDA. And again, the last 2 years, crop prices for the second year now are forecast, to be very high. And we heard from Dr. Brown that, that will probably continue for some time. So what happened then, after all these things changed, EFA came out with a new forecast, a revised forecast in November 2020, and all of a sudden, after that very pessimistic forecast in red there in July 2020, just a few months later, all of a sudden, when everything changed around in the ag markets, all of a sudden it was, whoa, now it looks like things are going to be really good. And again, like I mentioned, it takes a long time to increase production at all these sites. So the demand outlook really changed quite quickly from negative to positive. So now I want to talk about some of the supply factors. One, of course, again, is the energy shock. As some of you may know, natural gas prices in particular, as well as gasoline, other things have gone up significantly. EIA, the Energy Information Administration, came out with a forecast in the middle of 2020, and basically saying, look, gas prices are going to go up, demand is up. That's positive for ethanol demand, ethanol prices, corn demand, fertilizer demand. The Henry Hub natural gas spot price basically has tripled since mid-2020. And again, gas prices are going up. This is something that just came out the other day. U.S. natural gas jumps most on record. They had the highest one-day increase in prices since 1990. So again, a lot of pressure on gas prices. This is the price in Europe. You can see here that since early last year, about a 1 year period here, natural gas prices in Europe have gone up sixfold. Europe, or the EU, accounts for about 9% of global ammonia production, and about 40% of their capacity is shut down. And again, that's because they can't afford the gas. It costs them more to produce the gas than ammonia is selling for it. Right? So again, another shutdown in production just when we need more fertilizer. Diesel fuel prices, Dr. Brown already touched on this. You've got to transport the fertilizer, and that's cost. Shipping rates are up, Dr. Brown touched on that, so I'll jump ahead here. The cost of producing fertilizer. If you're a non-integrated producer, and you want to produce DAP, those costs have gone up from $195 to $670, basically tripled to produce that product. Other factors, you've got anti-dumping and countervailing duties. Anti-dumping is when a company, you can read it there, but when basically a foreign producer is selling it at below production cost. Countervailing is when a foreign government basically subsidizes a producer in that country. Again, sort of unfair. And there was a phosphate case we have now duties on Morocco and Russian phosphate. The impact of that case was initially, you see there in the Moroccan imports, U.S. imports in brown, and Russia, I think it's the green there. No. Sorry, I can't read it. See the colors from here. The green ones are the green bars are the ones to focus on. Those are the imports from other countries. You can see Morocco and Russia were the main exports to the U.S. of phosphate fertilizer. They dropped considerably after these trade duties went into effect, and that did have an impact on phosphate fertilizer prices in the U.S. But then right away, imports from other countries came in and we're sort of back to the same level we were previously. So phosphate imports are still coming in to the U.S. Despite this trade case. What it really did is change global trade patterns. Phosphate that was coming from Morocco and Russia into the U.S. now is going to other countries. We also recently, we had the determination on a UAN case, which was filed against Russia and Trinidad, and those duties just went into place as well. Nitrogen Solutions is produced by fewer countries globally, so it's going to be a little tougher to bring that product in, but again, there are sources for that. On the potash side, again, as you know, we're familiar with, tighter inventories of any material typically lead to higher prices. And you can see there in the red bar, the latest data we have on inventories is for September. Well, you can see, go back 2 years ago in September, it dropped from 5% to last September, and then this past September, we had a 21% drop because demand, again, has been very, very strong as these ag markets have turned around dramatically. And as a result of those tighter supplies, we've got higher prices, despite the fact that production and shipments were both up for North American potash. Another thing that plays a big role here is turnarounds. Ammonia plant, as you saw, is a big chemical plant. You've got to replace some of these motors, some of these engines, some of the pipes. You know, it's a dangerous chemical process, and all these things have to be maintained. So every 3 to 4 years, these plants have turnarounds, which means typically, every 25 to 33% of these plants, both domestically and globally, are down for a period of time to do these turnarounds. These turnarounds do take some time. Well, because of COVID, the turnarounds that were scheduled to take place in 2020 did not take place, or some of them even 2021 did not take place because you've got about 100 contractors. You don't want them running around your plant because they're contractors, so you're worried about COVID. So these things were delayed to 2021, and even some still currently, because they can only be delayed for so long. There's safety issues, there's production problems that result. So then you turn around and you do these turnarounds because you have to, just when you should be increasing production because demand is going up. Again, something sort of out of control of the producers. Another thing, again, some of you are familiar with the weather events. Back in February, there was a big freeze. And again, about 60% of the ammonia production in the U.S. is sort of in the Texas, Oklahoma, Louisiana area. So a lot of these plants are affected not only indirectly because they couldn't get natural gas or natural gas prices went so high, but just because of the freeze itself. They had to shut down the plants in preparation. And when you shut down an ammonia plant, it takes quite a bit of time. You don't just flip a switch. You've got to do a lot of things to get it running again. So these shutdowns typically take a few days to up to a week. So again, just when we needed more production, something impacted that production. So again, as you see here, cold weather started the plants, and you had a short-term market balance tighten further. And you can see the impact of that freeze there in February. You had a 19% drop in ammonia production. That's about 250,000 tons of nitrogen, a little more than 300,000 tons of ammonia. Despite that, fertilizer production in fiscal year 2021, which ended June 30th, was only down 2%. Hurricane Ida, again in September, was another impact. Same thing, the plants had to shut down in preparation for the hurricane, and that cut into production. Another big thing here you'll see coming up is trade disruptions. Belarus accounts for 21% of global potash exports. Again, it's a concentrated industry because it's a resource-based. Canada is the largest producer. Russia and Belarus run neck and neck for second largest producers with about 20% of production and 21% of exports. And I think some of you are familiar with what's going on there. Basically the country is run by a dictator. The EU has sanctions on Belarus. The US has sanctions on Belarus, so we're not importing any potash. Again, that's 21% of the market. We saw earlier that the US is over 30% of the export market for corn and soybeans. You can imagine what would happen to corn and soybean prices globally if we stopped exporting corn and soybeans from the US. So again, this is one of the major things impacting potash prices. You also see in the bottom right there, Lithuania was going to end their railroad contracts with the Belarusian potash producer. That's the only way they can get the product out currently. That's the way they're doing it. The blue line there, you see gas prices were much higher last time than this time. But again, they fell dramatically, almost 70% in only 3 months' time as those crop prices came down.
This time, they just continue to increase more steadily, but a little more stable than last time. And then finally, for potash, in 2008, potash prices went even higher. Again, and then they came down quickly. Potash demand, the supply situation was tighter there, so potash prices came down slower last time, but they still came down quite early. Now we're still talking about potash demand, flattening out, but not any sign yet of declining. So that's kind of what I wanted to talk about today, and if there are any questions, I'll be happy to try to address them.